Hello traders, it's Samurai Trader here. Welcome to session 96, how to day trade any market, the $1,000 a day challenge. If $1,000 a day is not enough, you simply increase your position size. In other words, trade more contracts or more lots. Now, what I teach in these sessions, you can apply to futures, forex, or the stock market, and even crypto if you're a crypto trader. Now, as always, I do need to pull up the disclaimer. You can pause the recording if you like and read the disclaimer. There is a risk in trading. Don't trade with money that you can't afford to lose. A very quick advertisement. If you haven't already downloaded The Truth About Day Trading, my ebook, the description link is below. Also, if you look below, you'll see me use a number of, or refer to a number of spreadsheets. You can also download that Excel spreadsheet and input your own figures. In fact, I recorded a short video on how to actually use it. So if you go to the description link below, put your details in, you'll be able to download that. And just a very quick advertisement here just on my program. First of all, make sure you do subscribe to my channel so you can be kept up to date. But for $197 traders, everything you see here, that is all of my indicators, is over 200 hours of online video instruction. There's 35 PowerPoints. There's actually 17 fantastic day trading strategies and scalping strategies. Mind you, you only need two to trade. That's all you really need, is just a couple of strategies. And in fact, if you're a brand new trader, you start with just the trend trading strategies, which I'll discuss when I get to the charts and all of my indicators that you see. So $197 plus I have a special going where I run a live trading room, but also run a coaching room where twice a week, every Tuesday and Wednesday evening, 6 p.m. to 8 p.m. Eastern Standard Time, you can log in, where I'm explaining every aspect of my setups, how to day trade, money management, the psychology of trading. If you can't attend the live sessions, they are recorded, all for 100 included, I should say, for 197. And after the first month, if you go, wow, this is fantastic, which you will, you can drop me an email and sign up for my coaching ongoing. Now on my website it's $297, so don't forget the links in this PowerPoint, sorry, I should say in the YouTube video below. And by the way, traders, my videos are raw, real, and unedited. Okay, so if I make a mistake anywhere, you're gonna have to forgive me. All right, let's get into this and let's get serious about this. Traders, I'm going to be very blunt with you what it really takes. In fact, I get negative statements, or I should say thumbs down, because I'm direct with a lot of the things I'll say in these videos, because I'm going to tell you how it really is. Now, is earning $5,000 a week the reality, or a genuine reality? Absolutely. How do we achieve that? Just by trading 10 contracts at $100 a day. You go and bump that up to 300 a day, that's $3,000 a day. That is the reality of this business. The fact is, though, most traders will never get to this level because of poor discipline. They don't have the right trading strategy, they're not trading the right market, and a whole lot of other things that go with it. So I'm going to show you how to do it correctly and how to trade correctly. Now, some of you don't want my advice, you won't listen, and you wonder why you struggle. So please stay there whether or not you join me as a member. If you're a trader already making money, fantastic. But if you're struggling, you've got to listen to what I say, because I'm going to really put you on the right path. Now, as far as $100 a day goes, by targeting $100 a day, once you go from the simulator, what it's doing is building both confidence and competence. From there, of course, this is from Jason, made 4,200, thanks to you. If I was down under, I'd buy you a beer. You can then grow from there, but you've got to start somewhere. Now, in today's coaching session, we're going to be looking at the NQ 4-tick, the 4-tick NQ. Now you can apply what I teach to any type of chart, whether it be forex, actually chart, I've already told you about the markets, to any type of chart, time-based chart, Renko, Heikinashi, time-based chart, etc. I prefer Tick and Renko. Why? Because they just work really well together, but particularly Renko for a new trader. Look how smooth this is. In fact, if we just look at this now, which I was going to go back to and see if we have some time, this is the Russell right now. Now this is a 3-1 Russell, and just there we can see, just there I've got my trend line there, and look at these moves. Now you can see here, traders, that the arrows and whatever, that's my, for members watching this, that's my 121, and each one of these steps here you can see down is worth $5. Each step up is worth $5. So on the Russell, and you can apply this equally to the Dow, it's $5 a tick. Now this is 21 in the evening, 21:23 in the evening, Central Standard Time. Now here, this is what we're after. Now if we just consider this, and in a moment we are going to move on to some other really important stuff here, but if we take this market, how much do you really need to trade the Russell or the Dow? Well, if you're going to have a 10 tick stop and you follow my rules of only a 2% risk, you need $2,500. okay, why? What's 2% of 2,500? It is $50. Now if we go for just $100 a day, now what is $100 a day, traders? That's 20 ticks or 20 steps. Now what I want you to see here is, once again, let me pull this down so you can see here. Whoops, I'm recording this. I don't know if actually I can pull it down. Maybe no, it's not going to allow me to pull it down correctly. This is Monday the 22nd of April. I'm recording this, and so this is the Globex session. This is totally live right now. This is not a replay. And so what you can see here, traders, the reality of picking up these trends, how many ticks is in? Oh, that must be 30. This must be 30. Now to let you in a little secret, I'm a scalper, which means I'm generally on this market, I'm after 8 to 10 ticks per trade. Okay, I don't like to trail. It doesn't suit my style. A lot of traders do. In fact, what you're seeing here is actually my scalping chart. It's a fairly clean chart. I've got my pivots on there. Okay, I've got my trigger line here. You can see the what I call the cloud, my EMAs here. And so after hours of a Globex session, the market actually closes. Just give you a little bit of history here if you like. If you're a brand new trader, the market actually closes at 4 p.m. Central Standard Time, 5 p.m. Eastern. That is the futures market. It then reopens an hour later. And this is what we call the Globex session, where you've got much lower volume, but you can easily trade 10 contracts. Okay, easily trade 10 contracts, particularly on this market and on the NQ, and especially on the micros. Now if you don't have that $2,500 to start with, okay, you can start on the micro with only 10% of that. You see, because they've got a micro contract. Okay, now let me just show you one thing here. Now what it shows us here, 2,500 going for just $100 a day, you have the potential within 19 weeks of earning your 10 grand a week. And how this actually works, you only start trading an additional contract every time you double your money. So it's you're using the market's money, a conservative approach. Now all of a sudden you say, gee whiz, this is going great, I've built my confidence and competence, let's go for 150 a day now. Now that's 30 ticks a day. Look where you are in 12 weeks. Well, actually 11 weeks, you're up to basically your $10,000 a week. That is the true potential. But unfortunately, most traders won't approach this as a business. They don't want to hear about it. They want to get in, get rich quick, etc., and they wonder why they struggle. They're not willing to wait for this. Now we've got very mechanical rules on how we trade these, and you'll see some in a moment. I'm going to go through those with you. But what I wanted to point out is, if you've got a full-time job, this is a fantastic market to trade, as is the NQ, as is the YM, as is the ES, as is oil, as is well, actually gold's more for a more experienced trader, because it can be very, very whippy. Okay, it can be very kind, but the yellow metal can be a bit challenging at times. But let's get back to this for a moment, and it's this. So in this particular day I only fired off 3 trades for 3 winners, all over and done with. My target is $200 a day per contract when I'm on the 4 tick. If I'm on the 6 or the 8 tick, I'm after 300 to 350 a day per contract. Why the difference? Well, I've got to trade a 4 tick here. If you're trading at 2% risk, you only need $4,000. Okay, the higher the time frame you trade, the greater the amount of funds you need, because your stop losses are going to be larger. Okay, so the higher the time frame, the faster the market, the higher the time frame we trade, the larger stop loss. Okay, so that's where there'll be a difference, but that's beyond the scope of today's video. Now here, for members watching this, I had a beautiful 2D, and I used the 121 here to confirm the reversal, had a 13B, then I had a beautiful T7 down here, which is a double bottom off the current day's open and yesterday's close, and you can see how it gave me great support with divergence. Thank you very much. What I didn't take was this little T25 here. You had another one, 34B, and you had one over there. Now we're going to explore this for a few minutes in greater detail when we go to the charts, because I want to sort of give you some tips and ideas on how I actually find these trades. And I'm what I call a pattern-based trader. I'm looking for patterns in the market because they're easy. This is not rocket science. It's about taking the time, getting the screen time, and learning all about these. For an example, just while we're here, why not take this trade? Well, right below me, see that black line there? That's an EMA from a higher time frame. Okay, and you'll see we quite often will bounce off that time and time again. So this is a 200 EMA from my anchor chart 1. We bounce off it time and time again. But the most important thing here is if I had have sold here, I was selling straight down into support. In fact, some of your best divergence trades and reversals will actually be off these areas of support and resistance. See over here, can you see how we had a little bit of a bounce off that pivot? We only had a 1 candle bounce there, but your pivots are a trading zone for support resistance. Now they're also very easy to learn how to trade once you understand the rules behind them, but they become a self-fulfilling prophecy. Now what I want to quickly do is run through a realistic trading plan with you. You see, if you've got a compelling future, you'll find a way of doing something. Okay, if you've got a big enough why, okay, you'll find the how. I'm going to show you the how. Now first of all, what if you don't have $4,000? That is, to trade this market, okay, normally you'd need, and here I'm trading 5 lots, you'd need $4,000. Now if you trade a larger account, you want to lower your risk. Okay, so I run at a maximum risk of 1%. Okay, at the older you get, okay, as they say, there are old traders, there are bold traders, but there are no old bold traders, which means you tend to, I'm in my 60s, you tend to become more conservative, which is really the way to go as you build your account. But if you don't have $4,000, you can start here with $400 with that just a $20 target. You see, the micro, and I should have pointed this out if you're a brand new trader, the micro is 10% of a big contract, and so instead of being $5 a tick, it's 50 cents a tick. But what it means here, that if you go for just $20 a day, within 12 weeks you got the potential there of having nearly $5,000. From there you can roll over. Now, can we achieve $20 per day? Well, here just here, that's on the micro, trading just one contract. Here 63, 75, 88. It is reality once you learn the setups, and provided you trade the strategies according to the rules. And that's the hard part, believe it or not. That is following the rules. Trading truly is 90% psychology. Okay, the setups I use, many of them have been around for years. Yes, I might have fine-tuned them and made them and perhaps improved them in some ways, but like the T25, the old floor trader strategy, yes, I've added a few things to it, but it's been around forever. And as Gann famously said, there's nothing new under the sun. Now, what does this mean to you going for just $20 a day? Now here, remember, it's one contract. We then go and see this. Well, within 12 weeks I've now turned my 400 to 4 grand. I can now start trading the big contract, where I'm now going, instead of $20 a day, I'm now after 200 a day. 12 weeks from there, I have the potential of basically earning 10,000 a week, and my account size is gone from 4,000 or 400 24 weeks prior to that up to nearly $50,000. And remember, you only start trading a second, a third, and a fourth contract each time you increase your account by $4,000. Now, in total, it's taken you 24 weeks to get there. Now, in hand on heart, I've got to say this, that it will take you a little longer, because you're not going to start trading a live account until you've mastered the setups on the simulator. Okay, so that might take you 6, 8, 10 weeks, but do it correctly, because what actually happens is you're creating what we call muscle memory. And if you say, I can just keep resetting the balance on my simulator, you're going to carry those bad habits over to your trading. Just like you'll hear me say in coaching sessions, we tend to bring our personal problems over to our trading. If you're a gambler, if you're perhaps short-tempered, if you're impatient or lack discipline, these are things that we need to deal with for you to succeed as a trader. But this is the reality. Now the question is, okay, how do I do it? Now, if you're trading, say, the 4 tick, and you are like me, where I'm a scalper, typically 3 to 4 trades a day net after any losses. Okay, now you've got to take your losses off there, but you're after the highest probability trades. For members watching this, we're after the 2Bs, the 34s, the 55, the 89s, and 200s. That's how we get there. Now, what I've also done in this this chart series, I've actually, for the sake of a training session I intend to do for my members, I've removed most of the indicators when I actually recorded this, or I should say actually did the recording. Sorry, let me take that back. When I did the trading, sorry, it's been a long night. I actually did the trading, so you'll see there that the chart's quite clean. But why still use indicators? Well, they're a great confirmation tool. Okay, and I love this here. Better information isn't always about life and death, but it sure does give you a competitive advantage. Okay, that's what indicators will allow us to do. Now, couple of things as we get to the charts. There's some things we need to consider. All of these now will plot, or you can have basically plot on your charts automatically. If you're a new trader, you may not know exactly what is a pivot. How does the prior day's open, high, low, and close? What about the major EMAs? What sort of role do they play? The current day's open, high, low, and close. Once you have them explained clearly, you just start. They're really quite straightforward and simple, but these are forward indicators. Why? That is, most indicators are what we call lagging. These are predictive because so many professional traders use them. We trade into these and use these as support resistance levels every day, and also as targets. So what we're going to do now, we're going to go to the charts. I'm going to go through leading up to this and just describe what exactly I'm looking for. Now, the reason I go into so many details is that, yes, I want you to join me. I want you to buy my program. I want you to join my live trading sessions. I want you to come and join me month in, month out in my sessions. Yes, I earn an income from that, but I also trade every day. Now, what that means to you is the experience I'm giving you is incredible. I've been day trading now for 28 years. So some of you won't join me, but also I'll lose some of you because you'll think I can't do this. It's not rocket science. It's just a matter of learning the patterns that I'm looking for. So let's get to the charts. Now let's just start with this, because this is just before the setups that I actually took. Here's what we would have been looking at. Now in this particular case, this is 2 a.m. Central Standard Time, so this is leading up to the London Open, and there's some great trading, but this is also a very high risk zone. Why? See that black line there? That's the 200 EMA from an anchor chart. See the current day's open, yesterday's close. We can just see how flat we are. This is where we need to be extremely cautious traders with our trading, because these are real danger zones. Now what I want to see is a wave in the market. We want to see waves. I want you to imagine that the market, we've got an anchor chart, which is a higher time frame, is the tide of the ocean. The lower time frame, what I call my entry chart, is the wave of the ocean. So we want to be surfing in the direction of the overall trade, tide, I should say. I told you there was no editing in these videos. Now what we can see here is what we call angulation. See, our price is very strongly angled away. Now I've got minimal indicators on here, and so for existing members you can see here I've really cut them back, and this is what we call angulation, which is ripe for a reversal. So as I scroll along, let's now start looking for a potential setup. Now just here we do have one right there. I call that a T2. It's also a T20-1, basically just there. Now if we had have sold there, remember, we'd be selling straight down into support. Now you can do that, but you want to get to break even, to your entry price, mighty fast, because there's a good chance you could bounce off that level. Okay, so here we've got another setup, but look what's right in front of me. And what I teach my traders, I actually say to them, do we have blue skies ahead? What I mean by that, is it cloud? Is it going to be bumpy? Okay, well here I've got a couple of brick walls straight in front of me. Now I want you to also look at my long-term stochastic for members watching this. Okay, we have a bit of a sell-off here. That's good, so forget what I was about to say. I thought we were going to get a T10 set up, and just here I still don't have anything. Well, actually we could. Let's just look at the anchor chart one, and I'll explain to everyone exactly what I'm referring to here. No, I was looking to see if I've got a 2D. For members watching this, it's only a T19. I'm not really interested in this trade, but it is a T19. Now T19 traders is where I only have divergence on the lowest time frame. It's the weakest form of divergence. Sorry, I just coughed, so just pause the video there for a moment. So in this particular case, I probably would not have taken this trade, and you know what, I just missed out on a beautiful move. Now we could have traded, for members watching, that the T20, but I actually would have missed out on the trade. Now what I want you to notice here is we're getting a lot of angulation here. See how we're moving across? And by the way, you don't have to be perfect with your trading, but one thing you've got to be is consistent. Okay, so for an example, you're 34, but here we're selling straight into support. So as we come up, okay, what's in front of us? And this is where we've got to be checking regularly what's in front of the trade. Now what I can see above me here, I've got a pivot. Why is that important? Because I'm always expecting a pivot bounce. Now we have a very, very strong uptrend. When you've got a strong uptrend like this, we want to be looking for divergence, particularly when you've got angulation. For members watching this, you do have just there, a rule of one trade entry. I'm not going to call that as a trade yet, as we're coming up. Where's that pivot? Now at the pivot, expect a bounce. Okay, we nearly will always get a bounce off the pivot, at least one bounce. Now in a very strong trending market, you usually punch straight through your pivot. Now just here once again, I've got a T19. What do I mean by T19? I've only got divergence on my entry chart. I don't have it on my anchor chart too. What does that mean? Trend continuation. So traders, when you have no divergence on your anchor chart, and what I've actually discovered is a little formula between the anchor chart 1, anchor chart 2 and your entry chart that you use at different times of a day to get these divergence trades. We get what I call these double divergences. Now this is a trade we could consider. Now because I've got no divergence, so members watching this, we have no divergence on the anchor chart 1, we could take this. Okay, so let's now here of course I'm not in this trade here. So up here now I ended up having a 2D. Now these are trades from a week ago. Okay, I'm way behind. I'm recording all of my sessions. We should be up to session 102, I think it is. This is session 96. This is a beautiful setup, and if I just duck down here for a moment and we look at this right here, this is this one just here. You can see my entry just there. I had my first entry there, another one there, and my third one down here. So I'll explain these to you. So here I've got double divergence. Look at this divergence here. Now this is what I call a zero lag MACD. So I've had this coded for TradeStation and NinjaTrader. If you've got any other trading platform, I give you the settings so you can adapt a standard indicator to, MACD to model this. Okay, so I want to take this trade. So down I went, and it's not on this chart here, but we're out about here. I then had a 13B. Now what I want you to look at here is, do we have blue skies ahead? Meaning what's in front of the trade? Well, if we look at this here, it's all blue skies all the way down to here. So if you're going to go for a larger target, now's the time to do it. If you've say got major EMAs or a pivot in front of you, you might want to exit the trade. Now the concept of scalping is we want to get that cash register ringing as soon as possible. So I want to get in, get out, get paid. Now if you're trailing, you'll find you got the potential to pick up a lot more, but and that's day trading. You can do that. I prefer to get in, get out, wrap my trading up. So down we come. Okay, and we're actually out just about here. We're out of the trade. So if you look at this, just going back to that screenshot here, you can see there it was. We're out well and truly above here. I laugh a bit when I say this, but I'm leaving something on the table for the other guy. Okay, so here once we get to this trade in a moment, you'll see there I got out there, we were filled on our contracts over a couple of candles just here. But let's go back to charts here. So as we come down, I then had another potential entry just there. It's another 13B. Why don't I take that? Because straight below me, and we would have actually made some money out of that. One thing I should just explain to you here, with a 4-tick Renko, what that actually means is from the high to the low of the body of these candles, that's $20, ignoring the tails. So each one of these from the high to the low is worth $20. Now each step down you can see is worth $10. So I'm typically after 7 steps, but if I can see I've got a major area of support or resistance, it becomes what we call a price magnet point. So you can then go for a larger target. Now I then come down here and I've got a bounce. Okay, just here you can see I've found support, and remember some of your best divergence trades or reversal trades will come off these areas. pivots, open, high, low, and close, etc. And I had some divergence here. And for members watching, yes it was a T3. So yes, I could have taken that, but I wasn't in that one. So then we come up, we get a bounce. Why don't I take that short? Because of this. Now I'm interested in taking this trade. Why? I've got a double bottom. It is a 2D. Let's take the trade, and we saw what happened thereafter. So now I've made a new higher high, a new higher low. We could have taken this trade. What are we now looking for next? Got a higher high, we're looking for a new higher low. What's in front of us? We've got the pivot in front of us, so we could go and take that pivot. So this is not rocket science. It's just a matter of rules-based trading. Now let's just for a moment go back to this for a moment, where what's happened since we've been chatting here on the RTY, on the Russell. So we can see since we've been chatting here, we've come up, we're bouncing, surprise surprise, at the pivot. I also want you to notice the amount of angulation. You've got a lot of angulation, but you've also got divergence. See this one down here, you've got a lot of what we call divergence just there. Why is that useful? Because it's fantastic when it comes to confirming a potential reversal. Now I don't have it set up here, but what I'd now be looking at, what's my anchor chart telling me? Because remember, I want to be trading in the direction of the higher time frame. Now you would have here, you would have just if you were trading here, you could have picked up 2 days of profit just here over the last, what's that, 1.5 hours. So you can see the arrow. So members watching that, that's the 121. Okay, so there's my hull. Now where I use the hull, traders, is to confirm reversals. So if I'm uncertain about a reversal, I should say, reversal, I usually have that on my anchor chart 1 rather than the entry, but it can be a really nice confirmation tool. See, you've got here, you've got what we call the rule of 1. You've got the rule of 1 here. See your Renko tails. Okay, really, that makes a really nice confirmation tool, as does trading in the direction of the cloud. So traders, look, there's so much we could cover in these sessions. And sorry, let me just start. Sorry about that. I just paused that so I could pull the PowerPoint back up. So as I mentioned, this is not rocket science. It's a matter of learning these trades. Now if you're a brand new trader, you want to be trading in the direction, follow the goal. That's what you want to be doing. As you develop your skill set, we're looking for golden reversals, and all of these are patterns. So traders, as we finish up, so we are 34 minutes to this PowerPoint, come and join me in the coaching sessions where I'll teach you how to day trade. How long does it take? You give yourself at 90 to 180 days. And that's one thing too, I just should mention. How long realistically does it take before you're really trading and making money? Well, it really comes down to the trader. Okay, I've been trading for, as I mentioned, over 28 years now. So naturally I've got an advantage over 99% of the traders out there. But what I do trade are pattern-based trades. We think and we learn in patterns. This ain't rocket science, okay? But you do need to allow that 90 to 180 days. Now that's nothing. Time's going to pass anyway, so come and join me, traders. So I look forward to seeing you in our coaching classes. What else was I going to say? No, that's it. All right, traders, thank you. Bye.